everyone, I'm Ivy from CPF Board. For many, getting a house is a big step as there are many financial decisions to make. Just like Sean and Karen here, many are unsure of the steps and what they should take note of as they work towards getting their first home. Today, I'm going to share with you how you can better plan your finances with the support of CPF. Buying a house could be one of the biggest financial commitments in your life. It is therefore important to buy within your means. Whether you are a couple or a single looking for your own home, there are a lot of options for you. Namely, build to order, also commonly known as BTO flats, resale flats, or private housing. The first step is to decide on the budget and which housing option suits you. Depending on the housing type you are going for, there are other costs to take note of, such as property tax, mortgage insurance, and legal fees. One way to ensure that you are buying within your means is to keep your monthly housing installment within 1/3 of your gross monthly income. Also, your total debt servicing ratio, which is your housing repayments, after adding all your repayment obligations, such as credit card debt and car loans, cannot exceed 60% of your monthly income. Once you've assessed your budget and decided on the housing type, the next step is to decide on the loan type. Here are some considerations for you to think about. Am I eligible for HDB and bank loans? How much cash do I have to set aside as down payment? What is the maximum amount that I can borrow? What is the interest rate for my loan? Can I make capital repayment along the way? Take Sean and Karen for example. They are getting a BTO flat in Punggol and decided an HDB loan is more suitable for them. The HDB loan offers a stable interest rate, which is pegged to 0.1% above the ordinary account savings rate. They can use their CPF to pay for the 10% down payment in full. They can then use their cash savings for other purposes such as home renovation. Rina and Farhan, on the other hand, decided to look for a resale flat. After looking around for months, they finally found their desired home. They decided on a bank loan which offers a lower interest rate for the first 2 years and plan to review the loan through refinancing thereafter. Here's a tip! One easy way to do your calculation is to use the First Home Calculator on the CPF website. To try it out, simply use the link in the description box below. Based on your income and other financial commitments, this calculator will provide an estimate property price and possible housing loan amounts that you can consider. Like Sean and Karen, many of you are thinking of using your CPF savings for your home. So how much CPF can you use? You can use your ordinary account savings, also known as OA savings, for your monthly housing installment, your down payment, stamp duty and legal fees, as well as your home protection scheme premium for HDB flats. As your CPF savings helps to provide a nest egg during your retirement, so the more you use on your home purchase, the less you have for your retirement. Hence, there are limits on the CPF savings that you can use for your home purchase. This is to ensure that you do not overspend on your home purchase and shortchange your own retirement. Let me show you how this limit works. The housing limit consists of 3 factors. 1. Type of property. 2. Type of housing loan. 3. If the remaining lease can cover the youngest buyer to at least 95 years old. In the case of Sean and Karen, who are buying a BTO, there are no limits on the amount they can use from their OA savings for their property. This is because BTO flats are subsidized by HDB, which are priced according to market value. For Rina and Farhan, who are getting a resale flat with an HDB loan, there is a housing limit as property prices are subject to market conditions. In this case, the housing limit is the lower of the purchase price or valuation price at the time of purchase of the property. So, what is valuation price? Once a buyer puts in the option to purchase, HDB will decide if a valuation is necessary to determine the value of the flat. If needed, HDB will assign a valuer to conduct the valuation and provide the valuation price based on the assessment. The purchase price, on the other hand, is the agreed transaction amount between buyer and seller. In this case, the valuation price is 300,000 and the purchase price is 320,000. So, the applicable housing limit is 300,000. If there is an outstanding housing loan after they have used 300,000 of their CPF savings, they can continue to use their CPF savings if they can set aside the prevailing basic retirement sum in their OA and special account, also known as SA. You can find out more information about the retirement sum in the description box below. Should Rina and Farhan decide to use a bank loan to finance their property instead, they can only use another 20% of the 300,000 to service the loan if they can set aside the prevailing basic retirement sum in their OA and SA. The maximum amount of CPF savings they can use for this property is 360,000. Thereafter, they will need to use cash to service their outstanding housing loan. We will write to you a few months before you reach the limit. You can use the link in the description box below to compute how much you can use for your property purchase. Here's a tip! Consider using a combination of CPF and cash to service your housing loan. With a small cash outlay every month, you will take a longer time to hit the housing limit and you will earn more interest. These savings will come in handy in servicing your housing loan should you lose your income in future. Your CPF savings earn good interest. With the pound compounding, it can go a long way in helping you to save up for retirement over time. The government pays extra interest to enhance retirement savings of Singaporeans. Let me explain how this works. For those below 55 years old, you get 1% extra interest on the first 60,000 of your CPF savings with a cap of 20,000 from your OA. For those 55 years old and above, you get 2% extra interest on the first 30,000 and 1% extra interest on the next 30,000. This means that you can earn up to 6% for your retirement balances. If you are below 55 years old and have a combined CPF savings of 60,000, you will earn an extra interest of about 13,000 over 20 years without doing anything. Before I move on, here's another tip. If you are taking an HDB loan, you can consider keeping up to 20,000 in your OA upon the collection of keys. You can keep the OA savings for your future monthly housing installments and retirement purposes. If you want to grow your retirement savings further, there are a few other options that you can consider. The first option is to do a CPF transfer. Do plan carefully when doing this transfer as they are irreversible. Hence, it is important to ensure that the money you transfer are funds you do not need for other purposes. Do note that there is no tax relief for CPF transfers. The second option is to do a cash top-up. You can consider making small and regular cash top-ups. For example, if you top up 50 every month, it will grow your CPF savings by more than 18,000 in 20 years, with the interest rate of 4% on your SA. By doing so, you can enjoy up to 7,000 tax relief. Lastly, the allocation rate to the OA decreases as we age. This is because we need to start saving more for our retirement and healthcare needs as we grow older. So, if you intend for your new property to be your retirement home, you are encouraged to pay off your loan earlier. After clearing your housing loan, you can enjoy a greater peace of mind when you retire. The remaining savings can continue to earn good interest, which will help you to grow your retirement nest egg. As long as you are using your CPF savings to service your housing loan for your HDB flat, you need to be covered under the Home Protection Scheme, also known as HPS. HPS is a mortgage reducing insurance which pays the outstanding housing loan up to the amount insured. It will help to protect our loved ones from losing the home in the event of death, terminal illness, or total permanent disability. It is recommended for each owner to purchase a share of cover corresponding to their share of paying the housing loan. The total share of cover for all co-owners must add up to at least 100% of the outstanding loan. Your OA savings can be used to pay for the HPS premiums as well. I have come to the end of the video. Thank you for watching. I hope you now have a better understanding on how to plan for your first home purchase. If you like this video, do subscribe to our social media channels to look out for more.